The Vanguard brokerage firm, known for low-cost investing and its conservative investing approach, now wants to be your new high-yield savings account. Well, of course they do. Cash is the hot new thing right now, with rates on many high-yield savings accounts and mutual funds up around 5% or more. So I guess Vanguard wants part of the action. They've recently launched a new cash management product called Vanguard Cash Plus. It's a high-yield savings account, but it also lets you optionally move money into a choice of 5 money market funds. So, is it time to move cash to the Cash Plus account? Let's explore the features and limitations, and at the end of the video, I'll tell you if I'm going to open up an account and start using it. Now, this Cash Plus account was piloted with a small group of users in August last year and recently launched to the public. I suppose this will help Vanguard collect more assets under the Vanguard roof, as if they don't have enough already. If this is meant to lure savers away from high-yield savings accounts at other financial institutions, they must be coming in hot with a stunning introductory rate or something really exciting. So let's check it out. Here it is. They say it's more than a savings account alternative, and they're offering 4.70% APY. I have to admit, I'm not impressed. This is mediocre compared to the competition in this space. You can get higher yield at any number of institutions like M1 Finance, Wealthfront, Betterment, and any number of banks with high-yield savings accounts. Even Robinhood is offering 5%, albeit with a $5 per month subscription to Robinhood Gold. But maybe there's some other great features and benefits aside from the rate. No fees. Okay, I mean, I wouldn't expect any fees anyway from Vanguard, but sure, no fees is nice. Asterisk though, there is actually a $25 fee, but it's waived if you select e-delivery of documents. But of course you're going to do that, so really there's no fee. Okay, then we have FDIC coverage. $1.25 million of coverage and double that for joint accounts. This is a lot of FDIC coverage. 5 times more than the standard $250,000 of coverage you would get with a standard bank account. If you have a serious amount of cash to store, this extra coverage could be a nice feature, but I don't think there are many of us that are sitting on more than $250,000 in idle cash. I don't know, maybe if you sold your house or something, this could be a place to send that check. But there's a reason that Vanguard could offer a higher amount of coverage. They'll actually take your money and farm it out to a combination of different partner banks. Now, if you already bank with one of these partner banks, you can call Vanguard to opt out of that specific bank. And the reason you might do this is that otherwise you wouldn't have the same level of FDIC coverage, because each individual can only be insured up to $250,000 per bank. You can't double dip FDIC insurance with the same bank twice. But we're already in the weeds here because this only matters if you have more than $250,000 of cash to insure. And this bank sweep stuff is all done behind the scenes and shouldn't matter too much to you as the saver. But anyway, that's how Vanguard can offer such high FDIC coverage. All right, so we have a high yield savings account with 4.7% APY, no fees, and no minimum balance. We have 5 times the standard FDIC insurance. What about these optional mutual funds? Well, you can optionally move some, or I guess all of your money that's in your Cash Plus account to a selection of Vanguard's money market funds. Now, I'm all about money market funds for cash right now, so this is a good thing. Here are the 5 funds that you can move your money to. It's a short and sweet list. A few municipal funds to help avoid taxation on the interest dividends you earn, and VUSXX, which is a T-bill fund and may be exempt from state and local taxes. And then a federal money market fund, which is very similar to the federal money market fund that is the default sweep fund in Vanguard's brokerage accounts. Now, each of these funds does have a $3,000 minimum investment. So if you're not planning to move at least that much into any single fund, it's a no-go. It's also important to realize that the 4.7% APY yield on the Cash Plus account is only for that cash that you leave there to be swept to partner banks. Once you move money into any of these money market funds, you get the rate of that fund instead. You also lose FDIC insurance on any money that is moved into a fund. Instead, you may be protected by the Securities Investor Protection Corporation. The other thing to know about this Vanguard Cash Plus account is that it's a separate account from your brokerage account at Vanguard. If you're already a customer with a Vanguard brokerage account, you don't automatically have access to a Cash Plus account. You have to actively open one, and it becomes its own account with its own account number. But when you do open up that account, you will be able to access it and see it when you log into your current Vanguard account. It's not like you'll need to log into two separate sites. I do wonder how seamless or not seamless that experience is. Vanguard's not exactly known for its elegant user interfaces. You don't get an ATM card or check writing privileges with this Cash Plus account, but unlike a brokerage account, you will get a routing number along with an account number, so you can use this account to receive direct deposits, pay bills, and use it with payment apps like PayPal and Venmo. It's all pretty minimal. If you want something more full-featured with all the typical bank features combined with a full-service brokerage, you might want to check out Fidelity's offerings instead. The Cash Plus account is truly an alternative to a savings account. It's separate from the settlement fund in your brokerage account, which holds money for making trades, and you won't be able to quickly move money from your Cash Plus account to your brokerage account. As Vanguard says, transfers, including from one Vanguard account to another, generally take 2 to 3 business days, but they might be quicker at times. According to Vanguard, your settlement fund and your brokerage account can be a good place for cash you're waiting to invest, since money moves out of the settlement fund to cover investment purchases. The Vanguard Cash Plus account is different. It's designed as an alternative to your savings account, a place where you hold money you're intentionally saving. Now, I'm a pretty loyal Vanguard customer for my buy and hold investing, so now that we know the features and benefits and frankly the limitations of this new Vanguard cash management product, am I going to open an account and move my cash there? I'm happy with my current setup. I do keep idle cash at Vanguard, but I'm perfectly happy keeping that in my brokerage account, invested in a money market account there. There's not even a minimum investment amount if you're using the Federal Money Market Fund as your brokerage sweep account, which is the default setting anyway. And as for FDIC protection, well, I feel perfectly safe about federal money market funds like VMFXX and VUSXX, so I don't exactly know who is going to be excited about the Cash Plus account, but it's not me. Maybe if you're currently banking with one of the big banks that still pay very little interest, and you want FDIC insurance on your cash, and you're loyal to Vanguard, well, then this might be attractive to you as a place to get more yield. As for me, I'm not opening an account and moving my cash there, but you can learn exactly where I am moving my cash by watching this video right here. VFMXX is currently yielding 5.28%, and I already have some cash in this account just naturally from having different accounts with Vanguard. But the question is, should I put more of my cash in this account? In fact, should I move all of my cash from my Ally savings account